We had an SBA deal that was literally at the closing line, Matt, and everything has been delivered. You said everything looked good. And then 2 weeks later, the lender came back and asked you for something. What was going on?
They asked for, because financials need to be dated within a certain number of days of closing, they needed updated financials through, I think, March. And so we provided those financials, provided those weeks before. Actually, it was through February. And we provided those weeks before. And all of a sudden they come back to us and go, oh, we annualized these numbers and they don't look that they look like they're going to be well off of what last year's numbers were. I go, well, first of all, you're annualized the numbers they gave me. First of all, you're annualizing those for 3 months and it's only 2 months. And second of all, this is for, you had February and then the slowest month. And this wasn't anything that was brought up before. Why are you now all of a sudden, as we're trying to get ready to close, making this a requirement? Now you need all this additional information when their cash flow is fine. It's the slowest 2 months of the year, January and February. Like, extra scrutinization is coming from the lenders. We're having to provide further explanation, having to go provide the year to dates from last year at this time to show that this is just historically speaking. Have we had this happen before on deals? Yes, but not this late in the game, not this many weeks after providing financials. And you're just, my head's kind of wrap around what's going on with these lenders, where the extra scrutinization is coming from. Everybody thinks the government provides the SBA loans for one, and they're providing a guarantee, and it's not 100% guarantee. They're providing a guarantee to the loan, right? To 80, 85%, depending on the loan size, they're providing a guarantee. And so if they don't get all their I's dotted T's, they still have some risk on the table. They have two risks. The guarantee could be wiped away if they don't have all their I's and T's, dotted and crossed. But two, if it does go bad, they have a portion of that loan can go bad. But this wasn't a large loan, and these people have significant net worth, significant cash flow, significant credibility, years and years and years of experience. And it just blows my mind that the extra scrutinization on these strong borrowers that should be a slam dunk deal is just coming out from, don't know where it's coming from right now. Everybody's scared of their own shadow. You read the national news, you even read some regional news. Everybody, the credit admin and everybody on the bank side is just scared of their own shadows.
And that's what we wanted to talk a little bit about today.
Yeah, if you borrowed even last year at this time, things have changed. We're realizing this in real time. And even something that, even at the end of last year compared to now, the scrutinization is getting more heightened, more in depth. And for us to try to navigate that for the clients is what we do, and we do it best, but trying to get the clients to understand it's not just our clients, it's the seller side too. If it's a purchase transaction, that this is not on the borrower. This is the quote unquote new norm out there in the marketplace. And for us, it makes it very challenging to get all parties to understand that and understand that the deal's not at risk. It's just extra work that's being needed to get the deals to the finish line.
And that's what the topic of this podcast is today, guys. Welcome to Advice from the Deal Room. This is Ben Record, and we have Matt Russell here. And we're talking a little bit about what we're seeing in the marketplace, kind of from a lender pullback and some more friction that's just happening in deals. And it's putting tax on how things go through the process, where things may have just been smoother before. Now they're having a little bit more choppiness and some more back and forth kind of towards the finish line than we weren't expecting. So why does it feel like deals are dragging right now? I know you hit it on a little bit there, Matt, but why do you think it is?
Multiple things. Obviously, the national news, everybody's scared of what's going on. Interest rates are increasing over the last couple months. If you're looking at the 5 and 10-year treasury, you have what the Fed's been saying. The Fed is talking about, hey, now rate hikes are on the table for the rest of the year, when we were expecting rate decreases. So you're starting to see, okay, inflation's picking up. We've seen it with what's going on with Iran and the oil prices, but just the Fed's notes that came out the other day was they're looking at the PPI and going, there's more to this inflation than just the oil rollover and spillover into us. There's a deeper concern of inflation continuing to take off and not being able to tamper it down back to the Fed's target. And so those things are causing some additional friction inside the credit world. The rest of their portfolio, they could have some things wrong in their portfolio that has nothing to do with you. And so they're getting a little tighter on certain deals and just wanting extra liquidity, really dialing in on the financials. And there's nothing wrong with dialing on the financials, but the extra scrutiny that they're providing today, the extra scrutiny for liquidity and understanding what's going on with people's liquidity. You get questions that come up when you're like, oh, this deal's approved. And then it's afterwards, or even right before, you're like, yeah, we got everything. I've been going back in a deal we're going back and forth for the last couple of weeks. I'm like, aren't we approved? Like, aren't you taking it to committee? I thought you were taking it to committee a couple of weeks ago. And they came back with additional, and it's just getting hammered, hammered, hammered. And you're like, this deal was a slam dunk a couple months ago. What's changing? The other thing we're seeing is there's some continuous consolidation in the marketplace. Banner Bank just acquired another bank. You're starting to see more consolidation. There's been some credit union and bank mergers going on. You're starting to see that go on in the marketplace too. And so you have a change in the credit culture, depending on what culture they accept. We understand, all the fun things about construction. We're even want to higher contingency today than what we were even asking last year. And I think they're fearful of the inflation bubble, what we saw in post-COVID, right? And during COVID and all the inflation taking off, they're scared that we're going to go back to that place. I even had a question on a client that has solid financials on their gas station, and we're saying they're doing a 4-to-1 debt service coverage ratio, and their revenues have gone down, but their margins have stayed. Actually, their margins are good. Their bottom line has not really changed, just their revenue. And this is a gas station, and that fluctuates a lot. And they were asking, well, bottom line looks great. It's been consistent over the years, but revenue's starting to slide. It's in the gas station market. Things are very volatile there in pricing and the carbon tax in the state of Washington and just so many things in the continued moving of electric cars and obviously what's going on with Iran and everything like that now in 2026. But you're going, their numbers are solid. They have a very good margin. They've actually improved their margin over the last few years. And you're worried about the revenue slipping? Why don't you just care about the bottom line? The better question should have been, are their sales declining, like from a number of gallons? Because when you look at a gas station, it's really hard to see what's going on unless you're really looking at the gallons sold versus revenue. Because if prices go down, obviously revenue goes down. Just because you can sell the same number of gallons, but it's $1 cheaper per gallon, your revenue is going to slip. And so for us, it's the frustration you can feel from the clients when they're going, what in the world's going on today? What's these extra questions? And we navigate a lot of those questions without bringing the client, but we're getting better at, hey, here's what's going on. Here's what's been asked. I know the answer, but let me confirm with you to show you what we're doing on this deal and to be the open and honest, transparent communication back with everybody to show that, hey, we're not the ones slowing this down. This is a new norm. And it's hard for people to grasp that. Wow, so and so said they got a loan done in this amount of time. Like, every commercial deal is different. You might have 15 entities, and your guy you just did that as 2 entities. Whole different complexity of what's going on inside of your world versus their world. So you can't compare apples and oranges.
And with what we've been talking about right now, is it's not necessarily that the borrower's situation is necessarily drastically changed. It's that the environment's so uncertain and the environment's changed that's where the lenders are now acting different. We've hinted at it, but what's kind of been if we went back to January of this year, lenders and most of the forecasts were all putting 2 to 3 rate drops in for the year, right?
Yeah, expected rate drops, a little decline in the 5 and 10-year treasury, and the marketplace stabilizing a little bit this year. But however, with what's gone on with the Iran conflict, and then
Strait
that's
of Hormuz and all that good
yeah,
stuff.
all that's gone over, and inflation is now reaccelerating. In April, we're at 3.8% CPI. PPI was up 6% year over year. These numbers are making everybody in times of uncertainty creates anxiety for everybody, and which anxiety usually slows down the process and the funding of loans. And so you got the 10-year is spiked. We're at a 52-week highs, the highest it's been in a while. We're at 4.6 or so given the day. We got the new Fed chair that just got approved to come in. And so we're starting to see this. And then recently there was, CoStar provided a great report on the Fed senior loan survey, and the optimism that we had in January is reversed down to what it is in April. And they want to ease some concerns because there's a lot of non-bank lenders out there lending a lot of money out there, but they got to be prudent and protect their balance sheet, maybe too prudent at times. But they're seeing the optimism is not there on the loan officers out there in the marketplace.
No, it is not. And that's affecting appetite for loans. That's affecting final loan to values, even if the deal cash flows there, just the lenders pulling back on it, adding more restrictions right before closing, not necessarily looking for a reason to not do the loan, but in a way, looking for a reason to cut back the loan. So what should we actually do about this? Lots of negativity there, Matt. What do we do positive now?
Positivity from this is we on our team is continue to learn what's going on with all of our lenders, continue to stay abreast of what's going on across the marketplace. So then we can roll that information back and educate our clients and all the third parties that are involved in a transaction to educate and explain to them what is going on. So they're not blindsided late in the transaction, and try to stay ahead of these obstacles. Biggest thing is have that open communication, especially with real estate brokers, and talk to them and tell them what's going on so they can keep the sellers and buyers, everybody in a transaction up to date, and knowing that we might need an extension. It's not the borrower's fault. This would happen with any borrower on this situation, so they can be fully aware, not be that anxiety and pull a deal last second. Guys, go back in the market. You're like, really? Okay, we're like 2 weeks away now instead of, yes, tomorrow. Just hold on, we're there. Everything is fine, getting through the mix, just hold on, guys. And here's explaining that to them. So our biggest thing is education and transparent communication.
And that goes into that education applying into how you look at pro formas and how you look at actually when you start to look for financing on deals. And when is a deal, we were just dealing with that on one of mine of normally we would have probably been able to get this nursing home deal placed with a lender already. And because of the current market, they're being a little more conservative. They want to see much more stabilized numbers before they look at refinancing. And that's just the change in the place. You got to be prepared for that.
And as long as you're aware that usually the comfortability, the uncertainty eases away, and it's the explanation and truly understanding what's going on. That you hit on a good note is those pro forma deals is there's the fear in that, are you sure you can hit those pro forma numbers? Like, yeah, this makes sense. The market rents make sense, but is there the demand there for it? Is there, are you able to actually pull this off in today's market? Cool, you pulled it off 3 years ago, but in today's market, and they're getting just a little bit more concerned out there. And from a putting on back of my credit hat. I mean, do I blame them? No, but they can't take the stance across the board on everybody. Is my only thing is really needs to get back down to, well, nope, that's their stance. What? I wasn't your stance 6 months ago. I understand things changed, but this borrower, I'm not saying they're an anomaly, but they take that into consideration a little bit more and deeper dive on that. So I just think we need to be pragmatic, proactive, overcoming those obstacles quickly for our clients, and just setting the expectations up front on a deal and going, hey, here's the reality. Here's the reality. And also the reality is we don't know. These things are changing. Things could change in the middle of this deal. We don't know what's going to continue on out there in the geopolitical landscape and how that's going to impact everything that's going on.
with how fast this war all came together, it could end all pretty quickly too, and we could all look like we were worrying about nothing, or it could last for years and years and years, and this is a whole other thing. And just so you guys know, me and Matt aren't soothsayers, and we don't know what the future is. So we're just trying to take a look at it, tell you what we're seeing, and give you the information so you can continue to pivot and adapt it to your own life.
And worrying about relationships, I think one thing we want to focus on is relationships that we build with lenders and the trust with them over years, and the trust back with us that we can deliver and deliver in a timely fashion. Because sometimes there's some lenders that are still trying to get deals, but when you get through all the way to the mix, it's not coming to fruition because they overpromise, under-delivered. And I would rather have my loan officers that we're working with on our side is under promise, over deliver. And that's one thing that we are continuing to work on here at AAI, is to have that communication back with all parties and try to under promise, over deliver.
And that's where one thing that we do is we may set expectations at the beginning, but as new information comes in, we're not afraid to reset expectations and to help our clients understand what we've been doing to solve it, and maybe the obstacles we've ran into and why it might be a harder deal this time around than it was a couple of years ago. Because the best thing you could do when you're in a pickle is continue to communicate and try to solve the problem together instead of just hiding and not doing the work. So.
I think that's the case of everything in life, Ben. It's not just, not just here in the lending world. I think it's just open, transparent communication helps people get out of obstacles, or at least understand how to overcome the obstacles in front of them. And I think it's just a good life lesson there, Ben.
So to kind of closing line here, your deals are probably still doable. They're probably just going to take a little bit more time and a little bit more back and forth, and what may feel like rehashing things that have already been dealt with or discussed, and maybe re-asking of questions that you answered right early in the process. And that's happening because of this extra scrutiny. That's happening because of the environment that we're in with the war and the economy, and we're trying just to navigate that, and the lenders are trying to navigate that themselves. So be patient with it and do your best to set yourself up, stay organized. That was one thing we were talking a lot about on our weekly call, was just the faster we can keep information coming to the lenders as we're in those processes, the faster you guys are organized. All of that makes everything way better. We do our best to help you stay organized, but at a certain point, we still got to get things from you guys, and having your things in a row, having your tax returns easy to find, all of that type of stuff really makes our job easier.
Agreed. And last thing on that is, you did hit is timely information back to us when we do, if there is additional requests, is because we can keep it in front of that underwriter. And we've talked about this during multiple podcasts over the last few months, is timely information
But it's a big one to remind.
Especially now when things are being heavily scrutinized. If we can get it in there and good explanation back to them, helps your loan, helps the loan go through the process at a faster pace than any delayed communication. And having that, and it comes also, if you listen to our last podcast, I think we talked about, Jay was on there with, working with underwriters directly with the credit team to explain things. Those are the things that we are working there to overcome for clients. And sometimes we never say that, but now we're getting better at saying what everything we're doing for our clients, so they can understand, oh, wow, this was not a slam dunk deal. Because sometimes they see it one way and we need to explain it to them in a way that makes sense for both parties. And that's where we bring our credit side and our relationship side to the table, and our deep understanding is, the better we can articulate and the more information we have to articulate that back to the loan officer and the credit team, the faster your deal can get through the pipeline. Every time we ask for these things, we're not asking for it for fun, and it's because we truly need additional information to explain something back. And we might know the reason, it might be great, but they need some support at times.
And that's one of the things I do often with my clients is it's like, we'll ask for the stuff and I might say, I think I know the answers to all of these, but before I just put my answers in there, give me what your answers are. And then we'll combine and we'll get it all cleaned up, because sometimes it's just the recapping in the client's words is what the lender needs. We can put it in too much of our jargon sometimes, and they just want to hear from the client that they understand what's going on and what the situation is. So, well, this was educational for you guys. To wrap up, I just want to remind you that this is for educational purposes. Please consult your CPA and your own lawyers for any questions or advice that we gave. Discuss with us if you want to dive in deeper. Shoot us a DM. We've been getting some really good comments and some engagement from people saying that they enjoyed certain parts of the podcast. And we'd love to hear from you guys of what things you want us to include on future podcasts. And we look forward to the next one. We should be back in person for our next couple.
Yeah, so guys, like us, DM us, follow us. My favorite is the DM. We're here, guys, so we're looking forward to more podcasts, and I think we got another few good ones lined up. Good information from our team as we continue to involve them in more podcasts, so you can continue to see underneath the underneath the robe, see what's happening behind closed doors. You can actually see all the good information that happens. And you guys, we look forward to having you guys on our next podcast, guys.
Thank you. Take care, guys.